Hello and welcome to this brief summary of a previous seminar that I held at Nasdaq Stockholm in January this year. That was a 2-hour seminar and the material is available here online. In this summary that I'll do today, I will briefly touch upon some of the areas we covered in January and focus on the relationship between the Nasdaq ESG reporting guidelines and other initiatives and standards in general, and the new Swedish legislation around sustainability reporting more in detail. I will also talk briefly about how to get started, which often begins with doing a materiality analysis. And my name is Fredrik Franke. I am responsible for sustainability advisory at PwC. So the first slide that I showed at that seminar was this quite busy slide with a lot of logos on it. And I probably could have added another 10 logos on here, no problem. But I wanted to show here that there is today a lot of different initiatives, standard, guidelines, regulation in place, which somehow has to do with sustainability reporting. And that can be quite complicated. So I just wanted to briefly touch upon some of these and put them also in a context with the Nasdaq guidelines. So I'm not going to go into detail of all of them, but as you can see, they range from everything from GRI, which is a reporting framework, to different ISO standards on reporting, the Greenhouse Gas Protocol, Integrated Reporting Initiative, the Task Force on Climate-Related Financial Disclosure, etc. And I did choose a couple of them to go into a little bit more detail on the seminar, and these are the ones, and I'll go through them a little bit and also how they relate to the Nasdaq guidelines. And the one I thought I'd start with, which is probably the most important one, at least for Swedish companies or European companies right now, is the new regulation and requirements on actually providing non-financial information into your annual report and your annual financial statements. This is a quite new regulation. It took effect actually about a little bit more than a year ago, 2017, and covers really the first financial year of 2017. It is regulated in the Swedish law called Årsredovisningslagen, the Annual Report Act. So it is formally a part today of the annual report. And I'm sure that many of you, if you haven't already gone through your first cycle of reporting according to these guidelines, maybe are in the middle of it right now, and then you are quite aware. But I thought I'll do a very quick rundown on what does this requirements really say, and how do they relate to some of the other initiatives that I talked about, and especially the Nasdaq guidelines. So who is covered? Is this for everybody? No, it's not for everybody. It's for what they define as large companies. And to be a large company in this context, you need to actually exceed a threshold on three different things that they've chosen. And you need to exceed a threshold either having 250 employees or more, having a net revenue of 350 million SEK, or have assets in your balance sheet for over more than 175 million SEK. So if you hit 2 out of these thresholds within the last 2 financial years, you are covered by this law. And we have calculated that we think it's basically will be around 1,700 companies in Sweden alone. So it's quite substantial. So the chance that you are covered by this regulation is quite high, I would say. So what does this regulation really tell you about what to report on? Well, first of all, like I said, it's part of the actual management report of the legally binding report. You can choose to have it separately in a completely separate document, or maybe in a chapter in your management discussion in the front end of the report. But it's still formally a part of the actual report, which needs to be approved by the board of directors. You can almost summarize what they want out of this report in one sentence, but I'm going to break it down for you. But that sentence basically says that the data or information you need to provide in this report is what is needed for the understanding of the development, position and results, as well as the consequences of your business. It's pretty much everything, but it really tells you it's information that's important, that's material for your standing as a company. And then, of course, they go into a little bit more details on what do they actually mean by that. And you can summarize it in this slide, basically. It's 5 main areas which is really in focus for your report. It's the environmental consequences of your business, the social conditions, personnel, employee-related issues, human rights issues, and anti-corruption. So how your business needs to relate to these issues given your very specific business model. You need to be able to describe that. And they also tell you a little bit about how. They want you to address business risks according to these areas, how you govern your company in these areas, and how you actually deal with some of these risks, and also what are the results of that work. So basically your key indicators, how do you actually measure success. And it's a comply or explain approach, so it means some of these areas might be a little less relevant for your business, and you can then get away with maybe not talking so much about it, but you need to explain that to the reader. So that is pretty much what the law says. There are some more details clearly, but that's really what the legal requirements are to report on. And you will see that they're actually going to fit quite well with other initiatives and the standards that are already out there and that a lot of companies have already followed for years. So the first one I mentioned, which is probably the most important standard looking at reporting on sustainability from a broader perspective, and that's the GRI, the Global Reporting Initiative. It's by far the most commonly used sustainability reporting framework worldwide. It's now up to its 5th generation of standard, and it's now called GRI standards. The one before was called G4, generation 4, now it's the 5th standard. And of all the companies on the Stockholm Stock Exchange who reports on sustainability one way or another, about 90% actually uses GRI. So this has become more or less of the de facto standard of sustainability reporting. And the way they structure the GRI is that they divide it into different things. The first is called foundation. That's really the principles for reporting, very similar to financial reporting principles. And then they have divided the standards into general disclosures, so basically telling about how you run your company. So that fits quite well into the business model of the requirements and the law. And then you have the management approach, so how do you run your company, how do you govern it, also relates quite well to what's been asked for in the legal requirements. And then what they call the specific disclosures, and that's really the different key indicators and the data on the different areas, environment, social, etc. So as you can see, the GRI fits quite well into the new regulation, the legal regulation on reporting. And if you are following GRI more or less, I would say you will pass the test of the legal reporting quite well. They put a little bit more emphasis on risk and how you deal with risk in the legal requirements than in GRI, but otherwise I would say it's a pretty good fit. Then we have the UN Global Compact, maybe one of the oldest initiatives in sustainability. That's not really about reporting, it's really just 10 very universal principles that you as a company can sign up that you say you support, and they range from human rights, labor conditions, environment, and anti-corruption. So again, fitting quite well into the areas both in the legal requirement and in GRI. And this has a little bit to do with reporting because if you're a UN signatory, UN Global Compact signatory, you need to report on your progress on how do you actually live up to these principles. And GRI and UN Global Compact has already, a long time ago, kind of connected their different standards. So if you do a GRI report, there's a way of cross-referencing into the UN Global Compact. And then we have a US initiative called SASE. It stands for Sustainability Accounting Standards Board. It's really the investors in the US initiative to define what they as investors want to, what kind of disclosure they want to see from their companies that they invest in. So they've taken that approach. They also divided it into different sectors. So depending on what sectors you're in, you are asked to report a little differently. But they also have a similar approach or how they divided it, and they divided their initiatives into the environment, social capital, human capital, business model and innovation, and leadership and governance. So again, quite similar to the legal requirements on what to report on. I know that the Nasdaq initiative has also looked at these standards for a bit of a alignment there. So I recommend you to go in and check that out and find your specific industry. So let's get to the core here, the Nasdaq reporting, the Nasdaq ESG reporting guides. And it looks like this if you haven't seen it already. And basically it comes down to Nasdaq summarizing a different kind of metrics that they think from their investor perspective is important for investors on the stock exchange. And they're divided into 3 different areas, and in those 3 areas they have decided on 33 ESG metrics that they think is important. And it's not sector specific, these are indicators that they believe more or less everybody on the stock exchange should be able to report on. And they're divided into environment, social and corporate governance. And they range everything from direct and indirect greenhouse gas emissions on the environmental indicators to CEO pay ratio on social, and tax transparency, for example, in governance. So, but those are 33 of them, and I think they're quite reasonable for most companies to be able to report something on. So how do they, what's more in this guidance except for these 33 metrics is? Well, there is a bit of a guidance how to understand these metrics. It's both explained what does it really measure. So that's a good thing to know. And also how can you measure it in a good way. And they also talk a little bit about why is this important? Why have they chosen this metrics, and why do investors think this is important? And at the end on each metrics they also have a bit of a cross table to show them how this metrics actually fit into some of the other initiatives that I just talked about, such as GRI, CDP, SASE, etc. So that's a quite good one. If you already are using some of the other standards, you can look at the cross-reference table and see if you already are reporting on some of these metrics. And if you look at kind of cross over the legal requirements with the Nasdaq guidelines, again, it's a good fit. If you follow these 33 metrics in these 3 areas, you will pretty much cover the 5 areas addressed in the legal requirements. So how do you get started to do this work if you haven't done it before? Well, it usually comes down to understanding what is really important to you. That's also what the legal requirements ask. What is material? And in the world of sustainability, the term that's been used for quite some time is materiality assessment or materiality analysis. Basically assessing what are the most important areas within sustainability for your company, for your stakeholders. And in these guidelines, Nasdaq is not really giving you a prescription on how to do that. They're rather referring to other already existing guidelines, such as there's quite a lot of it in the GRI guidelines and also in the SASE guidelines. But it really comes down to a pretty simple approach. First, you need to identify what could it really be? What are the issues in scope for you as a company? Next step is to try to prioritize these. Okay, out of these, which are the most important and the most relevant? And then in that process, make sure you validate that with your stakeholders, because they might actually be able to help you to identify what's most important for you. Have you talked to your customers? Have you talked to your owners, your suppliers, etc.? You can get very helpful insights from these stakeholders. So it's really about creating, I would say, like a funnel with a couple of filters in it to really make sure what filters do you use to, really boil down a lot of potentially important issues to just a handful of them. And that will make your reporting process a lot easier. And again, it's a good thing to involve your stakeholders in that process. So the dialogue with stakeholders, important. You can create a materiality metrics out of this if you'd like to, but you don't need to. So in the full presentation material that you can find online, I have given a couple of examples of kind of good or best practices in these different areas, how to communicate, how you have dialogue with your stakeholders or some other areas. Some of them might look daunting to you if you are a kind of first mover or a beginner in reporting sustainability. So the question is, does it really have to be that complex? Do you have to be a very, very big company to be able to do this? And I would say my answer is no, it does not. And I'll also give one example of a quite small company that has managed to do what we've been talking about here, very simple and very easy. So go ahead and have a look at that one. So that's basically the core of this presentation, which you can find in full online. A couple of tips for success factors for you when actually starting to working with this. And I would say, if you can, start early on in the year. Don't start with this just when it's really time to create the report. And build a solid base and understanding of your business and how sustainability really relates to that. Involve the entire executive management. This is something that they own. Even the board of directors own this reporting, so you need to involve the entire company. And think about sustainability rather as an input to create a sustainable business strategy than a separate sustainability strategy. I think that will help you. And of course, in any kind of reporting, set clear and measurable goals and targets and start using them internally, because that will also make it a lot easier when you're going to go look for those data to report on externally. So that was a brief summary of what we talked about a couple of weeks ago. So please have a look at the material, and please contact us at PwC or Nasdaq if you have any question. Thank you very much.
rewrite tomorrow.